Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing that's like a financial magic trick. Seriously, they're turning debt into stock. Is it a game changer or just creative accounting? Stay tuned to find out. This Form 8K filing reveals Currenc Group Inc.'s latest move, issuing a whole bunch of shares to pay off some debts. Sounds simple, right? But the devil is in the details. We will look into how many, to whom, and what it means for the rest of us. Before we start, if you appreciate getting straight insights from corporate documents, make sure to subscribe. We also have a Discord community linked in the description below where you can discuss all things business. Be sure to join us there. First, let's establish that this is a Form 8K. This is a current report companies file to announce significant events. Think of it as the breaking news of the business world. This document tells us about something pretty important that just happened. In this case, it's about the company issuing stock to get rid of debt. This report is dated June 15, 2025. Specifically regarding an event that happened that day. Currenc Group made a deal with its creditors to settle some debts by issuing new shares. This is a company in the Cayman Islands and they are registered with the SEC. The important information is further down. We dive right into the heart of the matter. Unregistered sales of equity securities, which is a fancy way of saying they sold shares without the usual public offering process. This usually indicates that they did not need to or could not do a regular public offering. Important to note, this is how the company is raising capital. So here's the scoop. On June 15, 2025, Currenc Group made a deal with 9 of its creditors. These were people or companies to whom Curious 373 of them to be exact. These private placement shares were issued to wipe out 12,000 to 6 in 6,600 of debt. We can probably guess that Curious 600 of debt. We can probably guess that Curious and Plummet 16, 6 as and 600 of debt. We can probably guess that Currenc needed cash badly because they are settling for about half the amount of debt. Here is how the deal worked. For every $1 of debt the company owed, the creditors got shares valued at $0.50. Sounds pretty generous, but for the creditors, it's better than the company collapsing and them getting nothing. The shares were priced at $1.43 each, and this translates into a 57-cent discount for each dollar of debt. In plain English, this arrangement means the creditors accepted less than the full amount they were owed in exchange for becoming shareholders. The deal wasn't set in stone immediately on June 1925. Just a few days later, the company and creditors tweaked the agreement with something called Amendment Number 1. The closing date, the day when the shares would actually be issued and the debt would be considered paid off, was pushed back from June 19 to June 30th, 2025 or later. This could be because of legal stuff, or maybe they needed more time to get everything in place. So by the end of June in 2025, the company was planning to finalize this deal. The details were all written down in the share purchase agreement and the amendment, which were added as exhibits to this report. If you are seriously considering buying this stock, you will need to read those documents, not this document. Those agreements spell out all the legal nitty-gritty. The report was officially signed off by Ronnie Ka-Wah-Hui, the Chief Executive Officer, on June 20, 2025. This means that he is saying that everything in this document is accurate and true to the best of his knowledge. Now, let's zoom out and think about what this really means. Currenc Group had a significant amount of debt, and instead of paying it off with money, it offered a piece of the company. This often happens when a company doesn't have enough cash or they think their stock will be worth a lot more in the future. For existing shareholders, this could mean their portion of the company is now smaller because there are more shares floating around, which could drive the stock price down. This is called dilution. For the creditors, it is a bet that Currenc Group will do well. If the company does, they could make more money than they were originally owed. If not, they might end up with shares that are worth less than they bargained for, or that could become worthless. So, what does this filing tell us about Currenc Group? On one hand, they're finding creative ways to deal with their debts, which can be seen as a positive. However, it also shows they might be struggling with cash flow, relying on their stock to solve short-term funding issues. There are a few notable risks. Issuing a lot of new stock can dilute the value of existing shares, potentially upsetting current investors. There is also the risk that the company's performance won't improve, leaving creditors turn shareholders with a bad deal. In conclusion, this move is a high-stakes gamble. It buys the company time and reduces its debt, but it also introduces uncertainty for shareholders. Whether it pays off will depend on Currenc Group's ability to turn things around and increase its value. Alright, that's our breakdown of Currenc Group's latest filing. What's your take on this stock for debt swap and what it signals for the company's future? Do you think this is a smart move or are they just kicking the can down the road? Drop your thoughts in the comments. If this analysis helped you understand what's going on, hitting that like button really helps. Subscribe for more deep dives into corporate filings and don't forget to check out the Discord channel in the description. Share your thoughts with the community and I'll see you again in the next one. Thanks for watching.